Are you looking for 100K in business funding on a business with no revenue without providing endless paperwork? I'll show you how. As a former business banker, I know what triggers the banks to ask for docs. And I've helped hundreds of business owners secure six figures in business funding without proof of revenue. The thing is, you still need the right credit profile to qualify for up to 100K in business funding. So go grab my high limit business funding engine training down below. It shows you how to kill those profile killing mistakes that even 750 plus scores have. Then you'll be well on your way to unlocking anywhere from 50 to 200K in business funding with no docs. Now, most people get asked for docs or even denied because they don't understand one hidden rule that banks use. And I'm going to reveal that later, so stick around. So look, the problem with traditional funding mechanisms is that lenders usually want to see tax returns, financials, and bank statements, all docs to prove your revenue. Now, this keeps a lot of small business owners stuck, especially the new ones, because usually you don't have the money or the revenue coming in to show the banks, and you need to get some credit to get the things you need to grow your business faster without using your personal credit, of course, or tapping out your savings. For instance, I had one prospect that came to me after going to KeyBank, and he ended up trying to use some things that he learned on YouTube to fill out his application for a business credit card and a line of credit, and ended up getting the request for documents. And then at that point, he had to leave the whole application on ice and just leave that opportunity alone because he didn't have any documents to prove anything. That's the type of situation I want to help you avoid. So what does it really mean when you're getting funded with no docs at the banks? Trust me, there's nothing shady about it. It just means you're using your personal credit profile as leverage to the bank. So basically, lenders are using your credit worthiness instead of tax documents, and they allow you to put stated income on the application. So basically, whatever you tell them your income or revenue is. Now, they're trusting you in this area because they'll see that you have good credit once they check your credit profile, and that shows that you have been a good manager of money before coming into the branch or before submitting your application. And when everything aligns, you're able to put in the application and get yourself ideally an approval without having to show any bank statements, tax returns, or anything like that. Now, the real question is, how do you qualify for up to 100K with no documents? Step one is to build your personal credit profile correctly. Part of that is having a 700 plus FICO score, having low utilization on your credit cards, having a credit profile with multiple accounts, not just a few, and having a longer credit history, like ideally 2 to 5 years plus. Now, the second step in that, and you'll start to see that this is a layered process, all of these things go together to ultimately get you to that goal. And the second step to this is making sure that your business is structured properly and looks credible. That's where we go into having a business bank account, an EIN number, a registered LLC, business address, email, website, and having a NAICS code or SIC code, which is not only low risk, but also in an industry that is deemed worthy of getting approved for higher limits. And at this point in time, just using consulting is not going to work at a lot of banks because it is starting to be considered high risk from its overuse by business owners who did not manage the business credit that they got using that NAICS code properly. Now, the next thing that you have to do is target the right lenders. You can't just go to any bank thinking that you're going to get a lot of money. You need to go to the banks that actually are actively currently giving out the most money. And this can change over time as things happen in the economy and in the world. It changes how banks operate, as well as consumer behavior can also dictate changes that different banks might make in their policies and how much they're willing to give out and in the requirements that they have. So you always need to be up to date on which banks are giving out the most money at the current time. So I'm going to give you an example by showing you this list right here of the top 50 banks in the US. So some places that you definitely want to avoid if you want to get higher limits and then get those higher limits with no docs is going to be Regions. You'll definitely have to show some financials at Regions, more than likely at TD Bank, the same, Fifth Third Bank also. Huntington, BMO. It is possible. It's not always, but still possible. Also, First Citizens is one of those places where you might end up having to provide documentation. Cadence Bank. And again, I know some of these banks aren't available to everyone, but if these banks are around you or available, just know that these are some of the ones to avoid. Synovus, they're definitely going to ask for, bank statements and proof of revenue. And you can tell that there are a lot of banks here, but those are some of the ones that you might want to avoid just because of the request for documentation. Probably going to be more frequent from those banks. Also, a good rule of thumb is that usually the credit unions and smaller banks, they are probably going to be the ones that are more likely to request documentation, whereas some of the larger banks may not. But that's still hit or miss depending on what the bank is. Some of the reliable banks that you can go to get higher amounts on your credit limit approvals with when all other things align as well, and get that with no documentation are going to be Chase, Wells Fargo, U.S. Bank, if you've established a relationship with them. PNC is going to be one. Truist can be one with a good established relationship. Bank of America with a good established relationship. KeyBank is one that you can go to and get no documentation. I know earlier I mentioned a client who made a mistake and ended up needing to show proof of documentation, but I'm going to talk more about why that happened in a second. And also Flagstar, that's a good place to go. No documentation usually. And it's pretty quick and easy to go in without a relationship and get a decent amount of money for them. So these are just some banks that you can go to. And again, it's going to depend on if they're available in your area. And also, I forgot to mention Citizens Bank. They are also one of those ones that give out higher limits and don't usually request documentation. Again, if you have everything else in alignment, because it's more than just selecting the right bank. Ultimately, one thing you're going to have to do is look at your credit profile, see what's going on with it, see which banks check which bureau, and which order you should probably go to the banks in, depending on that bank's rules, how your credit profile is set up. So it actually does require some thought and strategy on how you do this, and then you stack those approvals up to get to those higher total amounts. Again, with no docs. Now I wanted to give you an example of a client that I took through the process who beforehand got denied at a bank that he had been banking with for years, Navy Federal, who actually he had, quite a few thousand in the bank, had a long relationship with them, had high limits on the personal side, and they still denied him for a business credit card. And even with a great credit profile, 750 plus score, and everything else looking good, he still got low limits like 3K and 5K at other major banks. So with him, the first place that we went to was American Express, and he was actually able to get a few cards from them. We got 3 in one day. Basically, he got this gold card, and he was able to get $25,000 pay over the time limit, which is the revolving limit on the charge cards that they have. He was able to get this blue cash card from them at $13,500. He was also able to get another blue card from them, the Blue Plus, at $10,800. So that was about $24,000 on the blue cards from Amex, combined with the $25,000 on the other card from Amex is almost $50,000. Plus at Chase, he was able to get a $50K limit on his first card, and then went back for another card and was able to get $25,000, bringing him to a total of $75,000 at Chase. And this was before we went to Bank of America and Citizens for the same client. As you can see, that's well over 100 just from 2 banks, all with no documentation. Now, I told you I would tell you that hidden rule that banks use to determine if you're going to get docs or not, and also to determine your limits, or at least one of the reasons they use to determine your limits. Now, them requesting docs is tied to your revenue projection. Each bank has a different tolerance for how much revenue that they are willing to just allow you to state before they say they need to see some documentation on it. So you have to be aware of what numbers are too high in order to prevent the request for documentation. Now, also, if you put numbers that are too low, you run a risk of getting a lower limit because of the amount of revenue that you projected. And a lot of times people underestimate the amount of revenue that they can project because they don't know how to calculate what is standard in their industry. So a lot of times people end up getting either a lot less than what they need, or they end up getting declined as well because they didn't put anywhere near enough income or revenue. And because of other factors, now it looks like the business doesn't make anywhere near enough money to even get approved for any credit from them. and then they straight up deny you. So it's very important to know what numbers you can use so that you don't end up in that situation. Now, another thing the banks look at is your personal credit limits on your credit profile. The higher the limits that you have on your personal credit profile, the higher the limits you can get on the business side of the profile. Now, one thing is knowing what's too low or where's the benchmark of once you get to this number, now you have a foundational high level credit card that they would like to see. And then also knowing what's the ideal number beyond that foundational number that the banks like to see. Now, I go into what are those limits that banks want to see as far as the personal credit limits that you have, how many of them you should have, and what banks you can go to easily obtain those limits. All in the high limit funding engine training, which I have down below. So go and check that out to learn what that is and start to beef up your credit profile so you'll be in good condition to unlock these higher limits. Now, while you're doing this on your own, some things that you want to be aware of and mistakes you don't want to fall into is applying at a bunch of random banks and racking up a whole bunch of inquiries, because that will also soon get you denied. And if you didn't maximize your potential before going into those applications by beefing up your credit profile and making sure everything else is set up properly, you have a wasted inquiry and application. You want to make sure that your credit utilization is low. It needs to be under 30% before you start putting in applications, ideally anywhere between 3 to 9%. And the biggest mistake business owners make is waiting until they need money to try and apply for some funding for their business. Oftentimes, when you wait that long, it's probably too late. You're going to miss opportunities that could be a big revenue generating opportunity for your business. It could be a really big order that you don't have the money to get the inventory for. Or maybe there's a bid for a job and you don't have the money to take on that job. So now you have to miss out on that money. Making sure that you have all of the funding that you need before you need it is always going to be the smartest thing to do to ensure the success of your business. And especially in this economy that we have today, you don't know if there could be a downturn at any second. And if something like that happens, then at that point, it'll be harder to get approved for credit, or even with a perfect credit profile, you'll still get lower limits because the banks just are more risk averse at that time. So while things are good, it's always going to be the time to prepare and get what you need ready so your business can be successful. And let me throw one more twist in there. When it comes to putting in these applications, if you don't time them properly, banks can block your future applications for up to 90 days or longer. So I'm going to show you a timing hack as far as your applications to help you stack up all the way to that 100K and beyond within 30 days. And I'll show you that in this next video. Or check out this video, which YouTube thinks you might like, and I'll see you in the next video.